All right, so like I was emphasizing in here, I said that we are looking at using the fair value gap as our entry signature on the 1 hour time frame. That is after you've done your monthly, weekly, daily time frame, you know what the directional bias is, and we just did that together. And so the first entry after we traded into that, for clarity, let me show you guys the daily time frame volume imbalance. Remember? Is it the daily or the weekly? Sorry. The weekly time frame volume imbalance. Yeah, right here. And we mentioned that price actually traded into the premium volume imbalance. So, and on the daily time frame, you already know that what you're looking for on the daily is market structure. You just want to see price action create structure in the direction of order flow. And look at structure. Structurally, we're bearish. Price had created lower low, and we repriced lower high into that bearish order block, the 2 buy candles that were threaded through by the sell candle right there. That 2 candle is what you're going to match as the bearish order block. And if you measure the high to the low, that is a premium market. Price created a displacement to the downside. Okay. And on that candle, we traded back into that weekly time frame volume imbalance. And right here on the daily time frame, if you look at that, also, you would see that we have an implied fair value gap. You measure 50% of the candle wick here because you do not have a gap. The gap is there, but it has been mitigated by the candle wick. So you measure 50% of that first candle wick, 50% of this third candle wick. That is an implied fair value gap. Okay? But even if you don't do this, with what you have on the weekly, just go to the 1 hour. You're looking for your entry model. And the model is simple. Wait for price to create a displacement. And you position yourselves at the fair value gap. Look at how price created that displacement. Do you see that fair value gap? The fair value gap is happening during the London session, 2 to 10 a.m. London and New York is 2 to 10 a.m. New York Standard Time. London is 2 to 5. London kill zone is 2 to 5. Between 5 to 6 is what we call, between 6 to 7 is what we call the London lunch. Okay, so usually price will consolidate within that 1 hour period before the New York opens 7 to 10 a.m. New York Standard Time. So price traded into that fair value gap. That is your first entry with your stop loss above the fair value gap. And if you've been a good follower, of course, you would remember that this is an old wick in between the fair value gap. Is that not an IOFED? Another Confluence is the reclaimed bearish order block. I want to show you guys something. Look at in my left here. That left, that is a bearish order block that is supposed to send price lower. But what happened? Price opened with a gap and we traded below it. Do you see how price action paired up new sells at the reclaimed bearish order block right there? There's a bearish order block after price traded into that fair value, created a bearish order block. Remember what I said earlier? An order block is only powerful when it is formed off the support or resistance level, when it is formed after trading into an institutional reference point. This bearish order block traded into fair value gap and was created. That makes it valid. Bearish order block, reclaimed bearish order block Confluence. Do you see how price sold right there? Boom! The impulsiveness. Powerful. What happened? Price took out external range low there, external range low there. What is next? Repriced into internal range. Now look at your left. This is fair value gap. So you are looking at two things. You want to measure 50% of that gap in here, 50% of that gap as consequent encroachment. Should price get into consequent encroachment? But we are also looking at confluences because as far as price is concerned, a tap into that fair value gap already qualifies for the entry once price taps into the fair value. But because it's a large range fair value gap, now you want to use more confluences. So you look at your left. What do you see? I'm seeing a reclaimed bearish order block right at my left. And I know what you guys are thinking. Why is he not using that candle here? But you remember, when dealing with order blocks, we mentioned that you use the candle with the largest body. And of all the candles here, which candle would you have taken as a bearish order block? The candle with the largest body there, the low to the high, that is bearish order block. You see that price violated the bearish order block there, but later traded below it. We traded back into that confluence, bearish order block, reclaimed bearish order block within the fair value gap. You see the first time price traded, reacted, traded up again. That is your re-entry. If you are not too sure, wait for fair value gap. Price expanded, created displacement. Do you see a fair value gap you want to sell from? Yes, I do. Okay. Now, you must take note the time this is happening. Look at the time. It's 4 a.m., meaning London. Traded again the second time, New York. So if you miss this, another opportunity in New York. Displacement. Look at another fair value gap there. Do you see that? That will have been another entry. Displacement. Look at another fair value gap. I just hope that you guys are understanding what I'm doing this morning. You know, it's very simple and powerful model, but you just need to understand what we're doing. You see that? Fair value gap, old low, in between. So those of you who are trading swing, you can see this is happening during the Asian session. So that's still an entry, but you must put to consideration swaps, midnight swaps. And what is the drawn liquidity? Look at it by the left. You see that diagonal liquidity, that low resistance liquidity run? Price traded below that. We took out external range. What do you expect to see next? Price will definitely reprice into internal range. And even if it's going to reprice into internal range, look at what price did. Created shift of structure, took out liquidity there, and created a displacement. Liquidity was taking displacement. Is that a fair value gap? Do you see that? Right there. It's happening in London. That's a buy signature also. Drawn liquidity, that old high, there's a bearish order block above it. Price has delivered. Again, price after taking out liquidity, what happened? Displacement. What is your entry model, friends? Fair value gap. What's the time it's happening? 6 a.m. It's London session. Is that a sell? That is a sell. Where is the drawn liquidity? That low there. Did you see that? Price expanded, created another fair value gap there, traded into it. This is the concept I wanted to show you guys. It's a very powerful concept. If you study it, it's going to be a game changer for your trading. So last week, that was what we used here. Price created that shift of structure last week. You see that? And immediately I saw that internal range fair value gap in there that is confluencing with the bearish order block right there. Also, a reclaimed bearish order block, the buy candle that was traded through by those sell candles there. You can see that. All those confluences. So price traded back into the fair value. That fair value gap is the point of interest. You can see the first time was around 9 p.m. Then the next morning, London session, 2 a.m. That's it. Displacement, if you missed that, I called this live during the live session. That fair value gap there with the bearish order block, confluence. 7 a.m. That's New York session. Sell. Did you see that? The next day again, that's fair value gap there. entry, powerful. So it's a very powerful trading model. Okay, so price traded into that daily rejection order block and created that displacement to the upside. Price couldn't get back into the fair value, created structural liquidity there, traded back into it, into the bullish order block there. So if you were buying this gap, because of the large range gap, you could consider two things, remember? You could consider two things, 50% of the gap or the reclaimed order block, that bullish order block here that was violated before the shift. So that can be an entry, but of course your stop loss should be below that low or the other block, anyone you get. But if you don't get this, is simple. Wait for what? Displacement. Did you see that here? Price created that displacement, and during the live call yesterday, I gave a call that we want to buy this guy from here, and we bought. Again today, what do you see? Another one. The fair value gap with the old high in between. That's a buy. What are we looking at? Old high, relative highs. This is how to use this trading model. Please, if you understand the concept I just shared now, unmute your mic. Give me a feedback. Let me know what you think. What do you think? What do you think? What do you think? What do you think? Everybody, unmute your mic one after the other. Just talk. Let me hear. Can unmute your mic, guys?
Yeah, when you talk through, yeah, it's good.
Come again.
It looked very easy when you did it there. Yes,
You did what?
it looked very easy.
It is, if you understand it. The most important thing is just know your directional bias. Come to the 1 hour, just wait for price to consistently show you where they want to go to. You don't chase price action. You just wait. Let institutions create the fingerprint. Let them show you what's the next key level they are looking at. Then you act.
Yep.
Okay. Most times traders struggle because they are chasing it. They want to catch the trade at the peak high or the peak low. They don't want to have that, little drawdown when they take the trade and it looks like something going. You're trying to get it from the peak point, but it's going to take time for you to have that level of precision.
Right.
Okay?
Okay. Yep. Good.
Hello, Bala. Thank you for this. It's quite amazing how you're demonstrating this concept. I just wanted a small clarification regarding the timing.
Yeah.
Yesterday before your call, I had seen, based on what you've told, I had seen that move which you called the buy, but I entered a little bit earlier. You see those two black candles before it got into the fair value gap. I entered around there,
Today?
and it took me out on the Euro US. Oh, yesterday. So by the time you got on the call, I was a little bit confused on what direction it was going.
Yeah.
But today it's a little bit clearer. So
So
yes, the two candles before it entered into the fair value gap.
you mean right here, right?
So I wanted to
Here.
clarify on no, a little bit to the right. Yes, there
This was
around the New York session. Yes, yes, yes. So I entered earlier before it made that move and it took me out. So I just wanted to clarify on the timing. Is it that this should be functioning in the
it's not really the timing
kill
here. I
zones,
think
or I
it's
can do it
probably
anytime?
you took it. I don't know where you took the entry, but if you had waited, just like I have planned it here, there are almost about many entries here. The first time price traded was midnight. Look at the time there. Okay. Personally, I don't trade those sessions. Look at London, 2 a.m. Did you see price traded into the fair value? So if you had taken an entry right there at London, the stop loss should be below the fair value gap.
Okay.
You guys who saw the
I think
trade
maybe that
yesterday,
was
know
my
where I
issue.
put my stop loss now, below it. correct?
Mm-hmm. Okay.
So
Yeah.
price created the first leg, created fair value gap. Did you see it there yesterday? That re-entry there. If you missed this, they gave you another one. Institutions gave you another one there. Then this,
Yeah.
very easy.
So for example, sir, now like right now, would you say it's a good idea for someone to try trade now or wait for the New York session? Because
I
the
already
bias is
told
going
you.
upwards on the dollar.
Are we not in session already? We are in session now. The buy is already active right now. It's not like we're waiting for. It's already active. Getting your buy there, fair value gap. Correct? Look at what price has done. Created another swing low right there. Bullish order block too. Is that not right there?
Yeah.
Okay, it's not really. Okay, it's a bullish order block still. You see that? Price has traded into it and is reacting off, so it's a buy.
All right.
Have I answered your question?
Yeah. Thank you.
I think what he's trying to say that can you continue buying now or to wait for another confirmation?
It's like you didn't hear what I said, sir. You didn't follow me from the beginning. If you did, what do you mean you should wait for confirmation? Based on the model I sent, I just showed you guys now. You've missed the entry here. If you are taking an entry here, you know where the stop loss should be. Is that not? That was the confirmation I talked about, swing low. So what more confirmation are you looking for? What more confirmation are you looking for?
If someone is trading maybe the three candle pattern, would you want to wait for that candle to be violated at the top of the week?
You guys
That makes
are
sense.
confused, honestly. I showed you a concept. You are introducing another one. I didn't talk about three candles throughout the model. I said fair value gap. Simple.
Yes, sir.
So you don't need to complicate things. Keeping it as simple as easy makes it easy for you. Don't try to complicate it. It's just the fair value gap model. That's all.
Okay.
Next person, Philip. You want to ask questions? Sorry, I'm having my breakfast. You guys can join me.
Hello, sir. Good afternoon, sir.
Good afternoon, ma. How are you doing, ma?
I'm fine, sir. Sir, my question goes like this. I don't know if there's two fair value gap. So we have two consecutive value gap, fair value gap. Which one is going to be respected?
Confluence. You look for confluence. More than one reason to substitute your trade idea, just like I showed you guys many times, right?
Yeah.
I showed you guys now, Abi. In here, large range fair value gap. What did I say? Confluence. So you check, do you have a reclaimed order block? Is that not?
Yes, sir.
Right here, fair value gap here, correct?
Yes, sir.
Do you have a reclaimed bullish order block here by the left? Bullish order block. That bullish order block was violated here, but we traded up above it. Correct? Sell candle, traded through by buy candle. Is that a bullish order block?
Yes.
Was traded through the downside, was violated, but we traded up above it. That is reclaimed
Yes.
confluence. Hmm?
Okay, sir.
Fair value gap here. Is there a fair value gap? That gap there, is that not reclaimed bearish? Buy candle traded through by sell candle, violated traded below,
Yeah.
Confluence.
Okay.
So that's
Okay.
for madam.
Thanks, sir.
Look at another one here. After price took out that low, created displacement, that fair value gap. Is that not a buy? It's everywhere in the chart. It's just for you to train your eyes to see it. So you're welcome. Philip.
Yes, sir.
Philip.
Hello, sir. Well, good morning, sir. Thank you, sir, for this session. Please, can you go back to the current price action for dollar? So there's something that usually confuses me. Okay, you know, with our foundation in forex, what you have taught us that you need to buy at discount and sell at premium. Okay, usually, so for me, I would consider the previous swing low to the swing high, the current swing high, as my dealing range, as Mr. Solomon would say. So if I see like a fair value
Please,
gap,
I want
mostly
to say something. I want to say something.
I don't consider the
Wait,
fair value
I
gap
want to say
as,
something.
yes, sir.
If you guys are having sessions with me, stop telling me like Solomon said. I'm the one teaching, not Solomon. Is that true?
All right, sir. Very well
Is
said.
that
Very well
true?
said. Sorry
Solomon
about
too
that,
is my
sir.
student.
All right, sir.
Good.
All right, sir. Very well said. Thank you. Thank you for that correction. So, so as I was saying, sir, so should we ignore at that point your discount and your premium levels, and even if you see a fair value gap,
It's
prioritize
because
the fair value gap?
you've not been paying attention, Philip. I
Talk to me, sir.
categorically said it here that premium and discount. What time frame are you doing premium and discount? Is it not the daily time frame?
Yes, sir. Yes, sir. You said that.
Why are you talking about it here? So the 1 hour is
Okay. All right.
your entry model.
All
And
right.
I said,
Sure. I think it's clear now.
when
Thank
you
you. Thank you
have
for the clarity. Thank
two
you,
fair
sir.
value gaps like the other madam asked, look for Confluence. So fair value gap, old high in between. I were feeding by the left there. Is that a reclaimed order block?
Yes, sir.
Bullish order block. Violated. Now we are above it. We traded into it here.
Yes,
This is
sir.
the body of the candle within the reclaimed bullish order block. Is that not Confluence?
Yes, sir. That's the Confluence, sir.
Train your eyes to see these things first.
All right, sir. Thank you. Thank you, sir. I'm grateful.
Hello, sir.
Hello, sir.
Yeah. Good afternoon, sir.
Good afternoon, sir. Ask a question.
Yes. Please, sir. I am new here. I'm still watching your videos, but you are saying reclaim order block, and it's my first time of hearing reclaim order block.
Have you gone through all the videos?
No, I'm still watching, sir. But I just
So
want to
just patiently
still
go through
watching.
the videos first.
Okay, because you said reclaim. I don't know if you have a video with reclaim order block.
Patiently just go through all the videos first.
Okay, sir. All right, sir.
See it in there.
All right, sir.
Thank you. But even at that, from the explanation I gave in this session, you should have understood what claimed order block means, Mr. Ula. Guys, have you know so?
Yes, but sir, I really wanted to get a really understanding about.
I'm teaching you live and you're asking for video.
Okay, sir. Sorry, sir.
Nobody again wants to talk. So that means everybody understands what I showed you guys today, right? So please, what you do for me is, remember, we started with teaching the 3 levels of knowledge, and I said the highest level of knowledge is phronesis. Let me show you guys from Google what phronesis means. Oh, phronesis, Abi. What phronesis? You can see that Google is already telling us it's derived from the ancient Greek and it refers to practical wisdom or prudence. Wisdom from practice. Okay? So practice the concept, see them for yourself, train your eyes to see them. If you don't train, you're not going to see them. Okay? You must do the training. Go through the charts, check the assets. Of course, you know the relationship between the dollar, which is the benchmark asset. If the dollar is ready to move, you know that those guys will follow. So do a lot of insight, find them, journal them, and I promise you, you're going to be good. Okay? If you're just starting, get yourself a proper account. Don't fund too much on your life account so that you don't get to lose money and affect your trading psychology. Get a small prop firm, 10K, 20K, 50K, 100K. If you have the means, 200K, dedicate it to practice. Okay, when you pass, of course, you get your life account and you make money. But personally, I'm getting a 200K account today. With funded next because of the offer they are giving. If you buy one, you get one for free. So I want to do 400K in trading equity, and I'm going to pass the evaluation and all. So I wish you guys all the best. I'll see you guys in other sessions. If you have anything before I end the call, you can ask. You have to unmute your mic to ask.